What's going on, traders? I hope you guys are all having an amazing day. So I wanted to make a video, pretty simple, but I feel like there's a good amount of people that are just getting started when it comes down to investing in the stock market, and I want to make sure that I guide you guys in the right direction. And I'm going to be sharing with my experience, and this is solely with my experience, on the 5 biggest mistakes to avoid when investing in the stock market. This does not mean that you actually have to follow any of these, or these are something that you are going to experience. This is just with my own experience, what has led to my success, as well as and the biggest mistakes that I would have avoided when it comes down to investing in the stock market if I knew that they were present. So let's go ahead and get started. One of the first things that I think is one of the most important parts and one of the biggest mistakes that people make is that because the stock market is so accessible, and what I mean by that is you can literally fund your account, either your Robinhood account, your Fidelity account, your TD Ameritrade account. If you get approved right away, you can fund your account today, right? Today's Saturday, and it will be ready by Monday, market open, right? So with that being said, the market is very accessible. Therefore, people think that because they have access to the market and because they have access to maybe some newsletter or to some alert-based system, that they can trade in the stock market successfully just like everyone else. That's what I think has led to the failure of 90% of the people that invest in the stock market, is the accessibility and the kind of idea of overtrading. They trade with no understanding of what it is that they're doing, and they might just be new and they might get lucky on 1 or 2 trades, and they think they have this set market understood, and that's not necessarily the case, right? There's a lot of people that from that point forward don't understand how to identify potential, don't understand the importance of risk management, don't understand really any of the foundations and the very important small factors that really make a huge impact in your trading career when it comes down to investing in the stock market. That's one of the biggest mistakes that I would avoid. If you're just getting started, I would instead of starting and funding your account a couple $1,000s or a couple $100s, maybe open a TD Ameritrade paper trading account, and that will allow you to trade with, it's fake money, right? So there's no monetary risk, but you get to gain all the real experience if you treat it as real money. So instead of trading with whatever the thousands of dollars you have saved to invest in the stock market, start it with simulation trading. There's no risk involved, and you can still gain real experience. You can still set your alerts, you can still trade real stocks just like everyone else, and you can see and test the waters if maybe this is a market that you might want to get into. So that's one of the first mistakes that I think a lot of people make. One of the second biggest mistakes that I think people make is they trade based on other people's opinion. It's as simple as that. They trade based on other people's alerts, trade based on newsletters, they trade based on other people's just hype. The StockTwits is a very infamous platform for overhyping stocks, and with that being said, that's why our group TechBot Solutions takes it so serious when it comes down to other people hyping up certain stocks that we end up filtering them out of our group, because we don't want the new people to feel that, or to be encouraged to invest in stocks that they don't understand or that they don't see value in. So if you're trading based on other people's opinion or suggestion with no real understanding, then I think that's one of the biggest mistakes that you can make, because realistically, long term, I don't feel like it's going to promote long-term growth. At least not with my trading experience. When it comes down to investing in other people's opinion, you should never listen to anyone. And if you don't see value in this specific stock or ETF yourself, then you should probably not be investing in it. The second thing is no knowledge when it comes down to investing. There's nothing wrong with that if you've never invested in anything and this is your first time investing in any market whatsoever. I feel like you really need to understand what you're getting yourself into, because you think that the stock market is only where you're going to grow your account, when in reality, there's so many people that lose money. So with that being said, again, taking a step back and making sure that you understand the stock market and everything that it has to offer, both the good and the bad. There's a bunch of forums, there's a bunch of things that you can read online that gives you a better understanding on, in the stock market and all it has to offer. And obviously people are going to share both experiences. Just make sure that you're open-minded and that you're willing to hear both sides out. With that being said, if you believe that the stock market can be a market that you want to invest in, then feel free to do so, but make sure that you have set kind of just system set up that will guide you in the right direction. And the fourth thing that I think that a lot of people fail on as well is not having a plan when investing. And what do I mean by that? So let's say I'm planning on investing in Apple, whatever the case may be, whatever it is, right? I plan to invest in Apple just because, what the heck, I can invest in Apple and that's it. I have no understanding of if it's a good buy. I have no understanding if it's at a resistance and it's a good sell. I have no understanding about anything that Apple has to offer. I'm simply trading it because I want to, and I have no set plan, right? So I don't have, I'm not buying close to or near to the support to later sell close to or near to the resistance for a profit. I don't have any plan when it comes down to risk management and making sure that I'm keeping my losses small. So, my profits can end up growing my account, right? The only way that you can grow your account is if you can minimize your losses and maximize your profits. You can take 2 to 3 losses and 1 profit, but as long as your losses are left at 1 or 2% and your profits are anywhere from 5 to 10%, you'll end the week on a green note, right? So with that being said, if you don't understand that and you have no form or understanding of risk management, then I think that's a huge red flag, and you should probably take a step back before actually investing in the stock market, because as much as you play in the offense and wanting to make money, you should have the understanding that playing the defense when it comes down to investing in the stock market, especially the lower cap stocks, you should really take that into consideration and always have a stop loss or some form of risk management, a max loss, before taking a position. And if you don't, it's up to you, but I feel like that's where a lot of people lose exponential amounts of money or percentage, because they don't have a plan or set structure before taking a position. So the last thing that I think people really need to focus on, and one of the biggest mistakes, is that they don't have the set, foundation or understanding of the stock market. And what I mean by that is not, it kind of sets everything together, right? And what I mean by that is people don't first work on having their own eye for value. I think one of the biggest examples that I can give you is, I think it's very simple for people to understand real estate, or maybe, a car, because it's a more traditional way for investing. So let me give you an example. If I were to sell you, if you look online, it's very easy to see this. If you look online, or whatever the case may be, there's a house that's worth $150,000, and all the local houses are worth $150,000. All the comps, right, are worth $150,000 for similar properties to the one that you're potentially buying. With that being said, the house is worth $150,000. Therefore, that if it's listed for 120 or 110, it's a good buy, right? Therefore, you can make you have some form of indication or understanding that, hey, I understand the market enough within this area that they're listed for 150 and that this one is being sold for 110. It's a sale, right? With that being said, you have some set foundation or eye for value on how to differentiate a good buy versus a bad buy. Let's say the same house down the street is posted for $180,000. The property's value is 150. One's posted for 180, one's posted for 110. How is it that you can determine that whatever it is that you're investing in is a good buy? I think a lot of people need to work and develop their eye for value and how it is that they can identify a good buy. There's certain indicators that you can work on that can give you a better understanding on when's a good time to buy and when's a good time to sell, but you never want to solely rely on an indicator. So maybe you can focus on the kind of technical side of support and resistance. And when you're combining everything together with, indicators, support and resistance, and volume, and also kind of like what can act as a catalyst to drive these prices up, you'll have a better understanding on the investment that you're about to make. But you need to work on your eye for value and how to determine a good buy and a good sell. And I think a lot of people, just because the market is so accessible, or because they're so encouraged to trade based on other people's opinion or what other people see value in, they don't make that decision. They just end up jumping right into it. So I just wanted to make a very simple video on, the 5 biggest mistakes I think people make before investing in the stock market or while investing in the stock market. And I hope that it can minimize the amount of mistakes that these viewers end up making when initially going into the stock market. So if you're just getting started, we do have a free networking group. It's going to be the second link in the description, and it's my free Facebook group. It's TechBut Solutions. We have a little bit over 60,000 members worldwide. We'd love to be a part of your success, and again, it is free. We have our own group chat, and we pretty much share best practices. We share mistakes and effort to promote overall group growth. We don't tell you where to buy. We don't tell you where to sell. We're really here to assist you in building your own foundation and eye for value. And if you see value in that, then we'd love to be a part of your success. And our helpful video playlist within our YouTube channel can give you a better understanding of what the stock market is and what it has to offer. Also, for those that are interested in taking it a little bit more serious, I do offer a lesson library and mentorship. December is going to be the last month that I offer the lesson library and mentorship together. So if you guys would like to be a part of that and would like me as your mentor, that's going to be the first link in the description. Altogether, guys, thank you guys again so much for watching. Feel free to reach out to me if you guys have any questions at info@techbudsolutions.com, and I would love to be a part of your success any way that I can. Like always, guys, continue working hard, continue following your dreams. Let your passion be what drives in your success. Let's make sure that we end the year on a green note. Take it easy, team.
I'm at my prime. Yeah. I'm at my prime. Whoa. Have I gone too far? Do you detect something different? If you look